Great, thanks very much, Rebecca. And I have to say, I have a relate to the audience and our panelists this evening, since over the course of the past year, we've actually spun out a company from our research center, which is not in the crypto space, but does involve actually some technology involving actually machine readable regulation, which of course covers crypto regulation. So it's a topic area of great interest to me personally. And obviously I relate to some extent to the entrepreneurial journey because we have gone through a couple of funding rounds. And so I empathize with those that either have gone through it or going through it or are contemplating going through it. This is a really interesting space that the research center, the CCF, some of you may know the Cambridge Bitcoin Electricity Consumption Indexes. We have a fairly extensive digital asset research agenda and a team that does that within the research center. And I thought tonight we kind of try to demystify the space a little bit because it's really interesting for entrepreneurs. Our panel will talk about that much better than I can, and talk about where there are kind of these pockets of opportunity. And as you're thinking about entrepreneurship, what does this space mean to you? Now, to do that, like crypto's tricky, right? It's tricky in part because it's booming, changing, evolving, morphing so quickly. And I thought maybe it would be useful to start off by just doing some very brief context setting. So we all start off a little bit on the same page and understand a little bit about what the opportunity is before I very quickly go to our panelists who really can bring some insight into the topic this evening. So I'm going to share my screen very briefly and just walk through a couple of slides quickly. If I'm hoping that I'm assuming someone will tell you, yes, thank you. That's a signal that someone can see the slides. Okay, so let's just, I'm just going to present a few. First of all, the terminology of crypto. This is really interesting because part of the discussion in the space of when I say apple, do you mean apple, right? Or do you mean orange is a really big issue. We did some research in the center going back in 2000, we did this in 2019, and we took to look at the mentions of anything to do digital currencies, to crypto assets, anything. And what terminology did the regulators themselves use to describe it? From 2013, and over those 6 years, you see a really interesting trend where most of what moved in the eyes of a regulator in 2013 was by definition a Bitcoin, no matter what it was. Everything was a Bitcoin or a virtual currency. Then you started to see electronic currency creep into 2013. For that faded pretty quickly. Then you began to see cryptocurrency creep in. That's kind of hung in, but not to the same extent that we've seen, say, crypto asset grow, of which cryptocurrency is a subset, really beginning, I suspect, with what we call the ICO boom that happened in 2017, right? Initial coin offerings. And obviously, for entrepreneurs, that was a pretty interesting development. We may talk a little bit more about that. Our panel may have a view that that may not be dead and gone, right? And so this notion of terminology is still evolving. So when we talk about a crypto asset, I mean, the UK Treasury talks about it as something which might, but not necessarily, utilize cryptography and digital distributed ledgers or blockchains or similar technology. But the Financial Stability Board says it depends primarily on cryptography, distributed ledger, or similar technology. So you have a couple of the most influential voices in the financial services space that define these things, that frankly have significant variance in how they actually view what we think would be the same thing. But the bottom line is investment soaring. I mean, if you think about being an entrepreneur and you want to follow the money, there's a lot of money flowing. These just came out last week from CB Insights on the year-to-date funding volume on blockchain. So think of this as kind of the underpinning infrastructure regarding with respect to supporting the crypto space and cryptocurrencies. Money's piling in, and there was a lot of debate, I think, for a long time about is blockchain really going to see the light of day? And my panelists may talk more about some of these trends of the investment flows coming in, and of course, you're seeing just the growth of market capitalization, of course. And the recycling, that's sort of an interesting thing about the crypto space. It's one thing to create value, but it's another thing in the crypto space where you're actually able to take that value creation and recycle it often within the community. And so you get this very fast sort of growth cycle going on. And of course, it creates controversy. I mentioned the Bitcoin electricity consumption index. This is a big issue, right? And our panel may have issues on that or not, maybe not directly related to entrepreneurship, but is, green crypto, an opportunity for entrepreneurs? So we may touch on that. I'm gonna stop sharing my screen. I'm now going up. I stopped sharing my screen before I went to introduce our panelists and their names. So I'm going to have to do that verbally because we're not going back to the deck. We have 5 very distinguished guest speakers this evening. Teana Baker, who's Chief Policy Officer of the Chamber of Digital Commerce, which is actually, and I've had some involvement with it in the past, but it's been around for several years and it's pretty influential in terms of policy and the importance of advocacy for players in the crypto space. Jamie McNaught, who's the founder of Solidi, Sean Kiernan, who's the CEO of Greengage, Uzair Qidwai, who's the CEO of Cent, and Lynne Marlor, who's the CEO and founder of Transformational Strategies. I'm going to ask them to describe their bio in the context of their entrepreneurial journey and how that led them into crypto, because I think it's going to be more interesting, because I think crypto may be attracting certain types of people for certain reasons, and I think hearing about their entrepreneurial journeys can reveal that. I'm going to ask them to do that one by one. I'll introduce them. Teana, can we start with you, please?
Sure. Thanks, Robert. It's great to be here, and thanks for inviting me to join you today. So I spent most of my career in financial services, predominantly in transaction banking. And I was working on a number of proof of concepts and working with a number of fintech founders whilst at my last banking job, and really seeing the opportunity of blockchain technology and the promises of how it could, absolutely transform the way that we share value and data, information, and hopefully transform the way that we transact with each other. And so I made the decision to leave banking and go into crypto full time, because I really wanted to invest, 100% of my energy and time into this technology. And I was not going to be able to do that in my banking role anytime soon. So I went to work for a cryptocurrency exchange, which is a very, very small one, with the opportunity to be able to contribute to product development. I was our chief marketing officer and head of regulatory affairs. And this was a time in UK politics where there was a lot of emphasis being placed on really trying to understand the technology and the opportunities, but also being able to categorize the risks and look at how regulatory frameworks should be developed. And at that time in the UK, there was no trade body, there was no advocacy arm, there was really nothing to sit between the industry and policymakers. And so a group of UK-based organizations, market participants, came together and said, we need to really form a trade body that could help facilitate those conversations and really push the policy narrative forward. And really advocate for regulation, quite honestly. We were asking to be regulated. So that was really kind of the first foray into helping to form something. And I did that with a group of 7 other companies, but really kind of took the helm around what the code of conduct should look like, and identifying how different market participants would or could be affected by regulatory change. And then from there, there was, as you rightly mentioned, this was kind of at the height of the ICO bubble just before the pop. And there was another group of kind of concerned citizens that said, we're a group of friends and kept saying, somebody should really do something about this. This is not going to end well. And my grandmother used to say, if you're sitting around saying that somebody should do something, chances are that someone is you, because you've identified a problem, which I think is a key kind of founder mentality, that you see things and you feel this impetus to do something about it. So again, I was part of a founding team that created Global Digital Finance, which is another advocacy organization. slightly different than Crypto UK. Global Digital Finance was really positioned to assist global standard bodies and policymakers that are looking at crypto asset policy, well, any financial monetary policy across multiple jurisdictions. So, we're talking about organizations like the OECD, BIS, for example, the Bank of International Settlements, the Financial Action Task Force. So these are organizations that are kind of looking at crypto cross-border, as opposed to just one country in particular. And so I led that organization for a couple of years. And, after several years kind of in the policy space, I craved kind of that commercial intensity to kind of build, a product or build an offering. And again, the crypto market had kind of bounced back. We'd come out of what we called crypto winter during that period after that ICO bubble burst. And so I went back to helping to build a couple different crypto asset exchanges, predominantly focused on the UK. So whilst they weren't my company, I was kind of starting independent companies from scratch based in the UK to serve those customers. And now, as you mentioned, I'm back in the policy space, and that's really just a reflection of the absolute critical need. Crypto is really at a crossroads right now with policymakers, and there's a lot going on, which I'm sure we'll probably get into. And so I just thought that my energy would be best spent trying to go back into that kind of bridging the gap of education around the regulation.
Yeah, thanks for some of those listing. Actually, just generally in the fintech space, broadly defined, the UK companies have been a little ahead of some other markets, I would say even in terms of the US, of getting together and understanding the importance of getting a single industry voice to influence policymaking and regulation. The peer-to-peer lending people did that very, very well about 10 years ago. But I'm going to move on, and I want to talk to Jamie. Jamie, can you please give us a sense of your background and how did you end up in this space?
Thank you, Rob. Pardon me, sorry. Thank you, Robert. So I got into Bitcoin in 2011. I was working for a large investment bank at the time, working sort of 60, 70-hour weeks. And we were basically banging our heads off, numerous antiquated systems. Where I was working, we had sort of 10 IT developers in the team I was in, and about 100 operations people on our floor. And we wrote the software, and the operations people basically spent a large chunk of their day fixing the numbers and making sure it all added up. And for anybody outside of banking, that must seem absolutely unbelievable. But that is actually the way many modern banks work. So Bitcoin came along, I read the white paper, and I was like, wow, this is amazing. This fixes everything. It has to add up. It can't not add up. And more than that, it's independent. It's finally a really solid, good independent money. So I spent the next couple of years writing software, doing a little bit of mining, talking to people about it, thinking, we're going to have a Bitcoin exchange come along in the UK soon. And before I knew it, it was 2013. I'd moved to Cambridge, and there was still no Bitcoin exchange. So myself and a couple of guys got together, and we started building what eventually became Solidi. So Solidi is a UK-based cryptocurrency exchange. Solidi's USP is that we help people get in quickly and easily. So you can come to Solidi, you can sign up in a couple of minutes, and you can have your first crypto in under 5 minutes. There's no need for ID. We can onboard you without ID. It is, for anybody getting into this space, the quickest and simplest way to do it. So we joined Cambridge University's Accelerate program that they run at the Judge Business School, and built the company from there. And it's been quite a ride for the entrepreneurs out there. This is one of the most exciting spaces to get into, because you're at the sort of cutting edge of technology, cryptography, and banking. And unlike a lot of companies out there, companies in this space can get started with very little capital and get going and have an MVP out there and in the hands of customers and get amazing feedback straight away. Unlike some businesses where the turnaround time is very slow, this really is an exciting space to be in.
Okay, we'll get into more of that. We'll get into more of that entrepreneurial opportunity in a minute, because I think there are some things that sort of distinguish the space, right? And make it particularly interesting for entrepreneurs. I want to just kind of, thanks, Jamie. I want to get through some of the bios and just kind of get some of the, how did I get into this done? And I'd like to go over to Sean. Sean, could you kind of give us a sense of your story?
Yeah, I mean, crypto's been a great ride. I've been in it for about 5 years. I started in banking, similar background to Teana, very traditional. And through various iterations of the company I was last working at, I was the COO of the London office of the first bank in the world to do crypto, and that was back in 2017. And that was a Swiss bank that was more focused on private client business. And most of the clients that were coming to us wanting accounts at that time were corporates. And the back end of the corporate bank is very different to a private bank. And so the idea for Greengage was born. The whole idea for me was, this was my first entrepreneurial activity. I'd never worked outside of a very safe corporate job before. And having that sense of freedom is one thing that I felt. One, there was definitely a business case, but there still, I think, is a very strong business case to provide banking accounts to crypto companies. And we can talk about that on the panel, where the fiat world, the traditional GBP, USD, Euro interfaces with what's emerging. But I think the really interesting thing for me is what Jamie mentioned, that the technology itself opens up a huge range of possibilities for the plumbing of financial services in terms of efficiency and records. I mean, I wanted to be part of that story, so I thought here's a great place to give it a go. And we're still here 3.5 years later, so Jamie beats us on that front. But
well, I am left wondering if the reason a lot of you are still here is you actually bought crypto early, which I have a feeling, was probably a bit of a cushion in some ways of still enabling yourselves to be here. But let's go over to Uzair and hear about your journey coming in.
Hi, everyone. Thanks for having me. So my journey is a little bit different. I didn't come from the financial services side. I started getting into crypto during my university years at Imperial College. So I was doing my MBA there, and I was heading up the FinTech and Finance Club. And a lot of people were talking about Bitcoin and other cryptocurrencies because of the bull market at the time. And so I started to organize events, get speakers in, and help students who had a curiosity to learn more about this new technology to get into this space. And before I knew it, I was working at one of these blockchain companies that came to speak at one of my events. So for me, the journey really goes back to my student years. And when I first got out and started working in blockchain, I was more on the infrastructure side. So we were building a layer 1 blockchain, which really helped me understand the potential that this technology has just beyond crypto and crypto assets, which is now sort of what most people associate blockchain with. And so after, I'd say, about a year and a half of working with that blockchain project, I started to look into DeFi and some of the things that were happening within that space. And that's when I decided to get together with a couple of other entrepreneurs and launch Send Finance, which is a DeFi-focused crypto wallet. And during that time, we also decided to launch a crypto exchange, also DeFi-focused. So, it really, for me, it was a very different sort of starting point, but it led to where I am today.
Interesting. And Lynne, apologies. It was just the order. Please.
Well, thank you very much. Thank
Welcome.
you for having me. I'm really honored to be here from the United States. So my background's somewhat similar in that I was in traditional finance for many years. My last stint was at Bank of New York Mellon, and in 2017, they issued a BK coin. At that time, I was running a group which included all the asset managers, private equity, hedge funds. And I saw so much friction, between the securities, the cash, the FX, and, it just every day was problems. And so I started to ponder what do I do? And I read an article about distributed ledger technology. And I went to my boss, I said, I think this is the answer. Like, if we could figure this out. And of course, the banks, are not that interested. He did allow me to take a class at Oxford. I took like a 6-week program. So I learned about blockchain, about strategy, really, where and how do you incorporate it into your technology, into your process, et cetera. Went back to the bank. And I kind of felt that there was no meeting of the minds. They were stuck on the idea, as many of the traditional banks still are, we're going to do it our way, right? And this was 2017, 2018. And, BK coin went bust. And I just started to feel that I wasn't really connected to what they were doing. So I started my own company with another gentleman. We started slightly in the blockchain space. We actually sold that business. And then I got involved in Boston Blockchain. And so I'm currently the chair of Boston Blockchain Association. And I do everything that everyone talked about. We're talking to legislators. We're dealing with venture firms. We're doing deep dives into what's happening, as we know, every day. So last week we did an NFT workshop and a metaverse, panel. So that's really where I am right now, is I'm really trying to promote, rethink finance, rethink everything that you do, because this technology is so nascent and also so powerful. So my goal now is really to educate. I do a lot of strategy with banks, financial institutions, to try to help them navigate this space. So that's where I am right now. And I am invested in crypto because I love it. So.
Well, you walk the talk, which is a good thing to do. I'm going to go to Jamie, because Jamie, you got in very, very early, right? I think you said 2011. Is that right?
Yeah.
Yeah, and so you've kind of seen it evolve. So I'm interested from, as an entrepreneur, right? This space, as I mentioned earlier, has been evolving and morphing so quickly. Give us a sense of where it is today, where versus where was it? How has it evolved, right? And how has that evolved as an opportunity for an entrepreneurs? And then I'm going to ask some of the others, and where are we going from here? But I think you've been in this space quite a long time, so maybe give us some of the historical context.
Crikey, where did you start? I mean, well, the thing that all of us in the space remember from back in 2011 was the community. The community was probably more friendlier and more supportive because it was much smaller. The community has grown, I don't even know how big, but kind of back then, almost everybody knew everybody. I can't quite claim to have ever sent messages to Satoshi, but, we spoke to, I spoke to most of the sort of the people in the early days, on and off. As it's grown, the space has got bigger. We've seen sort of the usual bad people come into the space, which has, been problematic. But, the other things that have changed are things like, transactions were free. We didn't think about actually paying a transaction fee when we were sending Bitcoin back in 2011. It was instant. You sent the Bitcoin and it was there instantly. And it was for anybody who was trying to use credit cards or bank transfers back in 2011. Bitcoin was like a breath of fresh air. This was before chip and pin, so tap and pay was not a thing in the UK. And the ability to send money from your phone to someone else's phone instantly when you couldn't do a bank transfer in less than a day. I mean, it was amazing. And in the last 10 years, we've seen other great innovations like the Lightning Network come along, and then Ethereum and ERC20 tokens. And I think what we're seeing is finance being completely redefined. I think the sad part in all of this is that particularly in the likes of the UK, as so many companies have struggled to get started because they can't get banking or because of lack of understanding, and even just skill shortages in finding engineers to help build these things.
So Jamie, you mentioned that sort of the how fast the Bitcoin network was in relative terms versus today. I mean, is it fair to say that going back to, say, 2011 when you came in, to some extent, maybe it was seen as an alternative sort of payment network or transaction network relative to today, where it's maybe more considered to be a speculative store of value? I mean, I'm not trying to, you're the experts in this, so I'd like some opinions of how has the role of cryptocurrencies, frankly, changed in society, the perception of what it really means, because many of you have met or mentioned about this fundamental structural change in how the banking or the financial system actually works. I'm not sure it was as strong as that going back 10 years ago, but maybe it was. Uzair, you didn't mention what year you came into this, but was it, what era was it? And do you have a sense of what have you observed in some of these changes?
Yeah, so for me, I think you're right. There was this desire to see a structural change. You know, I finished my undergraduate degree right around about when the credit crisis was hitting the world. So as someone who graduated with a finance degree and saw that firsthand, that was one of the things that was always on the back of our mind when we were going to these crypto and blockchain events as students. And so there was definitely an appetite to see a structural change, a fundamental shift in the way how finance had worked prior to crypto and blockchain, and how this new community wanted it to work. Now, and I think that flavor has stayed with the community, but of course, as Jamie mentioned earlier, it has evolved from the early days.
So it's interesting because, most of you are not kind of what you would call, technology people, right? You're business people. I think that's what's really interesting, is that you're all living in this mess of the incumbent financial system and observed that this was sort of unsustainable. I think, Jamie, you're the only one probably that actually does some coding. Is that a fair statement? I mean, Sean, do you do any coding?
Not yet.
Yet. So you're still thinking about Python or something, or,
No, I mean, there's people on the team that do, thankfully.
Oh, of course. Yeah, but I'm just thinking of our audience. I mean, sometimes, crypto, I think if you're looking at it from the outside, sounds like a really technical thing, right? And I think what I'm sensing from all of you is that you got into this as kind of business people in a broader sense, entrepreneurs that didn't necessarily come from a deep technical background. Teana, maybe can I go back over to you and just ask briefly, do you have a sense of what are the skills and experience that are coming in, that are finding a place in crypto when you observe those who are successful in it, say as entrepreneurs? What does that background look like? Is it all over the place? Is it particular experience and expertise sets?
So I think one of the most fabulous and fantastic things about crypto is that it is, new. It is a completely new industry. When you look at, industries over the, it's, 10, 12 years old. So we obviously need people that come from other walks of life to come into, working within the crypto asset ecosystem. And yes, cryptocurrencies or Bitcoin was born from, the cypherpunk, the libertarian kind of, movement against traditional finance post the 2008 crisis. But from there until now, obviously, there's a number of things that have happened. There is global capital creation. There are payment systems that are using stable coins that can absolutely change opportunity for people who are underbanked or underserved by their banking providers. There is different ways to store information and share information. In addition to the kind of hype cycle around speculative investment, right? So I think what we're seeing now is the kind of convergence of traditional finance and this kind of emerging finance area. And that does bring into scope a little bit more kind of critical scrutiny around the resilience, the sustainability, and the governance structures that some of these projects or opportunities for people to invest should be subjected to, right? Because ultimately, if it's money, right, we have rules around how you hold people's money and, how people share money and, AML and KYC and all that stuff comes into it. So what that does is provide an opportunity, I think, for people from traditional finance that maybe have that muscle memory around how compliance works, how risk assessments work, that kind of give that robustness to running a business, as well as accountants, people in marketing, PR, just all aspects of running a successful business, right? So the days of, Mt. Gox and putting up a crypto exchange, which, I'm sure Jamie has seen the evolution of this. It's just the maturation of the market, right? And as more people get involved and it starts to mainstream, people have a lot more expectation around, reduction of friction. It shouldn't be that difficult. It shouldn't be too technical. Everybody knows how to use the internet. And ultimately with crypto, that's where we want to get to, where it's very easy to use, it's very easy to get a hold of, and you don't necessarily need to understand the underlying technical nature of a blockchain to be able to use it for transactions or to buy an NFT, for example. It should just be easy, just like it is to send an email or surf the web.
Yeah, we have some good questions coming in. I'm going to maybe start in a few minutes to start to thread some in. But I want to go to Sean for a minute first, because Sean, you're running kind of a merchant bank in effect, right? Now, a merchant bank would suggest that you're engaged in financial service activities. Like, are you doing lending? Are you doing things like that in crypto? Because, this is really where I think you get the sensitivity of the regulators and sort of potential reaction when you start to coming in. It's one thing to kind of the old days. We've got this, if you take a look at, some of the regulation with the EU, they're kind of leaving mining sort of off to the side, no regulation, but start to do stuff like lending, you start to tread on some toes. And Lynne, I think you probably are sensitive to that too, but I'm going to go to Sean first. And Sean, are you sensing kind of growing sensitivity around some of the activity areas that are starting to touch on more traditional banking providers of financial services?
I mean, the short answer is yes, but I think in a good way. When I say merchant banking, what we're trying to do is actually bring back the old practices of traditional relationship banking and deliver that to businesses. And we think crypto is a great way to unlock a lot of inefficiencies that the current banking models present, and deliver those services to clients in a way that understands them specifically without loading tons of cost onto them. And to give you an example, you asked about lending specifically. Crypto assets are like any other asset. They can be liquid, they can be illiquid, they can be moving around very quickly in terms of value. And what we're able to do today is facilitate loans wholesale. We don't touch retail. I agree with you, there are many risks in that market. At scale, with partners. So we're working with different regulated houses, mostly in the UK, where they can offer balance sheet for us to work with them to provide a loan against crypto asset collateral, sometimes into fiat, at sizable volumes. So we've done a couple $100 million of volume of such lending. But this is purely B2B, and from a client perspective, this is something that they're looking to a new asset class, and sometimes lending could actually hedge risks for them, because they still hold the underlying, but with a loan structure, you can potentially get some liquidity from an asset, and if it's a non-recourse loan, you can walk away from that loan if the asset drops in value, with you still preserving some of the release capital. This is not new stuff. This is basically what the Lombard loan market came out way back in the day with any type of asset as collateral. It's just in a new guise. And the DeFi markets, I'm sure Uzair will speak about, are a completely different way of structuring this. And here you could even look at some people offering uncollateralized lending, meaning zero collateral, but really drilling into who the counterparty is, and pricing, of course, would be higher in those cases.
Yeah, I'm actually going to go. I was going to go to Lynne, but I'm coming back. Okay, I'm going to go to Uzair first because this notion of DeFi. So I think, you know, it's a whole different bucket. I mean, I find it interesting. Uzair, walk me through kind of, let's call it algorithmic intermediation as a strategy for relationship banking.
I will simplify DeFi. I think DeFi, to me, is really, it kind of takes this whole idea of, you know, trying to start a crypto business would likely be capital intensive. DeFi takes that idea and really allows you to, you know, borrow crypto assets, almost like putting to use underutilized assets that people have sitting in their crypto wallets. So, you know, let's say Sean, Jamie, and Teana all have 10 Bitcoin each. It's not really doing much for them. They can put it on my exchange. I will make them money by allowing people to trade with it. So that's a very simple sort of way of trying to explain how these DeFi platforms came about. And they were used for trading, for lending, for all kinds of purposes. But really, I think DeFi is it emerged as a kind of the poor man's crypto, really, who didn't have, you know, for me as an entrepreneur, starting a centralized crypto exchange was never really an option unless I could, you know, let's say, load up inventory of Bitcoin, Ethereum, the top cryptocurrencies in enough depth that would be meaningful. But DeFi sort of changes the game where it allows you to crowdsource assets, and it allows you to crowdsource talent and start a business with that sort of lean approach.
Okay, so you talked about, when you say that word lean, it's a lot like supply chain optimization. I mean, if you think about it, right, there's a float out there, which is what's sitting in everyone's wallets. And what you're able to do essentially is through, you know, algorithmic intermediation is essentially identify and transact with those individuals that have float that seek to put that to work to earn something, which is higher than sticking your money in a high street bank, in fiat, in essence, right? Lynne, this is a big shift, okay? And so walk us through, I think first I'd like you to walk through two things. Talk a little bit about that shift, but I also like you, there's a couple of questions coming in about like, what's underlying all this? In other words, I want to make sure we do some level setting for the audience that's kind of wondering, okay, I'm great, I'm lending, I'm borrowing, I'm doing all this stuff, but where's the there? What's the, you know, could you just give us...
So, you know, I look at this, my career spent a lot of time in what I call liquidity management, you know, managing the liquidity. The company I worked for had a portal. You know, you could relate it to sort of a match.com. I got excess of something you want, and it matched up buyers and sellers for short-term liquidity, whether that was overnight, 60, 30, 90 days, whatever. I view this new world as very similar, except I don't have that portal that's being run by a, you know, financial institution in a sense, right? Algorithmic. All of that is being done. So if I have excess crypto that I'm not going to be using and I want to lend that, I can do that, right? In a trustless, immutable, transparent world. So that's how I view it, that it really is like a liquidity pool. Whoever has the liquidity provides that to the marketplace, consumers, individuals, corporations, et cetera, and then you can borrow against that, right? And then I can get that returned. You know, it depends on...
Can everyone hear me? We may have lost Lynne. Okay. Well, it's okay. So you froze there for a minute, Lynne, but I think we got the gist, and it really flags kind of another theme I'd like to tap a little bit, because, you know, you use the word trustless, and and it's kind of interesting because we're trusting Zoom right now, but you just froze. So I kind of want to drill in on that one a little bit, because I think the community likes to talk about trustless. Is it really trustless? Are we really not trusting anything? Or are we just trusting something different? Anybody got a view on that one? Lynne? Did
We're
you?
trusting
Well,
something.
it's not just trust list. It's
Sorry. Okay, sorry. I'll come to you, Teana. I'm sorry, I shouldn't have opened it up actually, because Lynne was going to follow up a little bit. Let me come back to you, Teana. Okay, after after we hear from Lynne, because Lynne, I think you wanted to comment on this. Is that right?
Yeah, I mean, I wouldn't say it's completely trustless, right? But it creates it's transparent, fully transparent, so that the algorithmic and the actual mining, et cetera, allows us to create that trust.
Yeah, but I am trusting the system, right? I mean, at the end of the day, we are still, I think, trusting. And I think I'm wondering if that's an area for entrepreneurs. Again, getting back to entrepreneurs, are there trust enhancing opportunities? Because, some of the questions I think that we're getting in have a sentiment like people, there's still uncertainty, like what's underneath some of this stuff and where, and you talk about transparency. Where is the view, Teana, over to you of where the trust read sits right now? I mean, it's maturing. You've made mention of the fact that this is a maturing industry, but my sense is probably the trust level, despite the fact we don't trust big financial institutions, which by the way differs greatly by region. I still think some people would prefer to actually see their high street bank, but that may be shifting. So please comment.
Well, I think there will always be people that will prefer their bank. My parents won't even use online banking. They want to go into the credit union and talk to their banker. So, there's definitely different degrees of trust. And I think some of that has to do with potentially how digitally native you are, right? And also what degree of trust is healthy, right? Because it brings into question, some privacy concerns and, creating honeypots of information that are targets for hackers for different reasons, ransomware opportunities, etc. But I just wanted to just kind of clarify that when we say things are trustless, what you'll often hear people in the industry say is trust but verify. So, there is a trust in the network. And, it's not necessarily completely algorithmic, right? So if you're looking at the Bitcoin network, we trust that those validators are validating transactions and that, when transactions go in, there's, some mathematical stuff that's done. It creates a hash. That hash is then added to the block. And then we can go back and look at that forever and verify that what we said was going to happen or what we intended to happen has actually happened. And so that's, one consensus algorithm or mechanism, and there are others. But the whole point of the blockchain transparency is that you're able to verify. And so it's just not blind trust, right? And what underpins, I could give you a very libertarian view about, the British pound is only worth it, the value that is written on it because you trust that the Bank of England is going to make good on that. Over the last couple of years, we've seen a lot of monetary easing and a lot of money printing. And so is this money really worth what we say it's worth? Could there be a run? And we've seen this happen in other countries. I'm suggesting that we would see that in the UK. But that notion of trust, I think, is very fluid. And so what this monetary system gives you is the ability to verify, number one, and number two, be sovereign. So I can have complete control over all of my assets, and I can choose to move them and use them when I want, where I want, without anybody kind of overseeing that activity. And so that is a big responsibility, right, to be your own bank and manage your own keys. But the opportunity is there for you to do so, which is dramatically different from fiat money.
Okay, a couple of comments. First of all, I think with respect to when I look at that pound note and what am I really trusting, actually some people would say it's the size of the military might, right? I mean, it's the sanctioned use of violence at the end of the day that actually has historically protected currency value. But and that's one of the things here that is a bit of an open question. And this gets us into kind of this, you reference sort of how you arrive at this trust but verify. And I think I'd be interested in the panel's view on, proof of work versus, proof of stake, for example. And there's a debate going on. I'd like I'm going to go to one of you, okay? So we don't have to, everybody doesn't have to open up, to define the difference, because it's kind of an interesting issue. It kind of relates into the whole energy environmental impact thing. But there are people that would view these as having different thresholds of trust production, I would say. And maybe we can go over to Sean. And I'm probably go to somebody else as well, but can you just first walk us through proof of work versus proof of stake, why that matters? Because that's quite relevant to understanding this sort of this production of trust but verify that Teana mentioned.
Right. So big question. Proof of work is what I think we're probably more familiar with as an industry, is what's been around a bit longer. And that really is the use of energy to solve a problem. As Teana more eloquently explained, it's basically throwing computer power at solving the most recent iteration of that block to process the last roughly 10 minutes for the Bitcoin blockchain of the transaction flow that's happened. And also create then an incentive for the miner in terms of a small sliver of those transaction fees as a fee, as well as newly created Bitcoin. And we've all read the Cambridge report on energy by country. It's fascinating to see the flows of different countries and which ones have grown recently. For example, China has switched off Bitcoin mining, and that's shifted mostly to the States and Canada. And there are questions around that. And I think we could discuss them, but I think there are people trying to do interesting things to reduce the potential ESG components. For example, using renewable energy to mine, co-locating mining facilities at renewable energy sites which have variable production. For example, wind power doesn't always produce enough or maybe too much that the grid can take. And if you co-locate a mining site at a wind power site, that can help to effectively act as a battery to use excess capacity to pay. To hopefully generate more revenue and help contribute towards paying back the cost of building a future renewable sites with variable production. Staking is very different, and instead of necessarily having energy or the processing power be what solves the blockchain, it's rather staking of assets towards a consensus, and that consensus is then going to agree on, for the last iteration of that block, what was the right outcome. And there are risks and rewards for that. If you stake your coin, and this is more the Ethereum 2.0 model that's emerging, and you have staked the wrong outcome, the coins you have staked could be at risk. So you might not be able to get the rewards for that. But it's more a consensus-driven model and much less energy intensive. And it seems that there's increasing focus on staking as a solution. But there are also risks to it. The risk in both of these is that more than 50% of the processing power is controlled in a single set of hands. And if that were to happen, you could actually dictate what the next block could be and change it to a negative outcome, potentially towards your favor. And with proof of work, I think, particularly in Bitcoin, that's nearly impossible at this stage. It's too broad and diverse. Proof of stake, we hope it doesn't go that way, but there are concerns if staking is consolidated a bit too closely, that could be a risk. That's a very kind of broad explanation, so apologies if I've gone too high.
No, that's fair. And Jamie, you've been in Bitcoin. You got in the very early Bitcoin days. What's your view on the whole proof of work debate relative to proof of stake? Is it going to trend away? Are they equivalent? I guess that's one of the questions in my own mind, is the equivalency of the incentives around preserving value, which is really the game theory principle here, right? Do you have a thought?
Well, I'll preface it and say I'm no expert on proof of stake. From the sort of very early days, everybody in the Bitcoin camp's been quite anti proof of stake, because we've never really come up with a solution that properly works, that doesn't have some very horrible corner cases to it. That said, I balance that with a fairly grave concern, maybe somewhat selfishly being a skier about the environmental impacts of the energy use in Bitcoin. But I think it's important to point out that the energy use that we have in the entire banking system and the entire regulatory system is not inconsiderate. And so people quite easily focus on Bitcoin as being hugely wasteful in that respect. But it's because it's easy, because you can say, well, it's burning coal to make this funny money. But when you look at the entire banking sector, the amount of energy that's used there is absolutely staggering. For instance, when I was in one of the large investment banks prior to getting into Bitcoin, our data centers were on average between 5 and 20 times as inefficient as the likes of Google's data centers, and nobody was doing anything about it. So it's easy to bash Bitcoin and proof of work cryptocurrencies for being environmentally unfriendly, but to this point, we've still not really seen a proof of stake system that is completely a replacement and as successful as Bitcoin.
Robert, could I just add one thing to that on
Yep,
this?
please.
Right. So I personally am not going to back a horse, right? Proof of work versus proof of stake. I think that there's obviously an evolution that happens with everything, right? So we're not using America Online anymore. We're using different things, but the fundamental basis for building on top of the internet and providing marketplaces and the transfer of information still exists, right? And that's grown. So I think that Bitcoin was a test case. It's proved that it works. Will it be a cryptocurrency? Probably not. Will it be a unique store of value as it's acting today? Probably, right? And what might it be in the meantime or in addition to? I think it can be fluid. I don't think that there's necessarily proof of work bad, proof of stake good. There's a lot of miscommunication around not necessarily how much energy is used. And the team at the Cambridge Center for Alternative Finance has a fantastic Bitcoin index, which you showed earlier. I encourage everybody to take a look at it. And it does look at consumption, but we're starting now to be able to really drill down into the data around what type of energy is being used. So there's been a Bitcoin mining ban in China, which actually used a lot more water than people necessarily understood. So it's not always burning coal, but China has said no more. And now as of August, the majority of the hash rate that's created in the Bitcoin network is actually being generated in the US. So there's more Bitcoin mining in the US than there is in China now today. And in addition to that, it's actually creating a huge amount of energy evolution in the US, which is already trying to fix a very, very antiquated grid system for their electricity, right? But in addition to that, Bitcoin mines can be picked up and moved. And so they can follow more sustainable energy sources. A lot more sustainable energy is used than is reported in the press. And it is creating a lot of innovation and investment in those areas that creates jobs, that puts commerce in an area like potentially an Indian reservation. I could point you to a number of those that had no means to make any money off of this land. And so I think that it's a very nuanced conversation that really boils down to, yes, it consumes a fair amount of energy, but that energy might be wasted because it can't be stored, might be sustainable or renewable, and that isn't necessarily being tracked or hasn't been well. And two, you can't ignore the socioeconomic benefits that it brings to the areas where Bitcoin mines do end up investing.
No, I think that's quite well put, and it is interesting. So on the back of the attention that the index has had, we've got 12 of the largest financial services firms in the world that are contributing to a digital asset research agenda that has 3 pillars. We'll probably announce those companies in the first quarter, and one of that is really drilling down, as you say, deeper into the data on the environmental footprint of the cryptocurrency space, because we recognize these are rough estimates, but boy, has it gotten attention. It's got people's minds focused. And your point about driving innovation, I think, is a really important one. Uzair, is this an opportunity for entrepreneurs? I mean, there's a lot of people thinking through now how to position around green, very purposeful entrepreneurial endeavor. Is this an area that is ripe for opportunity in the crypto space?
Absolutely. I would say all the major sort of layer one protocols that are out there, and when I say layer one protocols, I mean basically blockchain projects that have the ability to build upon. They're all looking at various ways to sort of, get some sort of buy-in from the community to start working towards green initiatives. I work with two different networks that we operate our infrastructure on, and they're both looking at various ways that not just the whole community as one starts thinking about these things, but also as individual projects, what can you contribute? What sort of a structural change that you can make to sort of work towards making this type of technology greener and more sustainable. So I think there is definitely opportunity for new types of solutions to emerge, and a lot of alongside a lot of opportunity for new entrepreneurs to come into this space and come up with new ideas to solve this.
I mean, Lynne, you worked for big banking and big asset management, and I'm interested, is green and this growing agenda in large corps going to potentially contribute to either the institutionalization or provide us an easier way in for those organizations to engage in crypto? Does the green factor, is that an issue here in terms of how they're engaging?
I would say absolutely. All of the banks are looking at ways to, how do we actually not only capture the information, but tell the marketplace that what we're doing, and how do they measure it? All of these measurement tools are being utilized. A lot of startup companies I know personally that are working with banks, with financial institutions, with other healthcare, power companies, et cetera, to actually capture and accurately reflect the numbers and provide reports so that you can put in an annual report to have a much more clear indication of what kind of energy you're using, how is it being used, how are you actually going to reduce it, and showing company by company, are they really capturing all the numbers? So there's a lot of industries that are coming from that, not only just capturing the data, but utilizing that data to use for investment, because shareholders are very interested today in investing in companies that are green. So I think it's becoming a huge marketplace. There are several companies I know that are doing startups in that space.
Yeah, and that really speaks to the point that Teana made about innovation, how this is driving innovation with that money going in. We're gonna get to questions soon. There's more coming in here. I'd like to ask, I'm gonna kind of go around the table, virtual table, and ask, you're an entrepreneur, you're curious about the space. How do you get to know more about it? How do you get your feet wet? I mean, you actually in your own journeys talked a little bit about how you all got your own feet wet, but where the business is today and where it's going, what recommendation or suggestions could you make to those that are listening that are curious about this space? Uzair, can I start with you?
Yeah, absolutely. I was actually gearing up. No, took myself off mute for that one. So yeah, I mean, I recently started as an entrepreneur in this space now 3-4 years ago, and I think things have changed quite a bit. I was fortunate. I got to work in the layer one blockchain, which gave me some sort of technical understanding, and therefore the confidence to then be able to go out and try to build a blockchain or crypto-based business. But I think now we have this new movement, and I don't want to get too technical, but I think most people on this panel and those that are listening have already heard this term called a DAO. And so a DAO, a decentralized autonomous organization, is what it stands for. And the opportunity it represents, especially for young aspiring entrepreneurs, is the ability to get involved, and not just get involved, in the sense of being able to go, shadow someone for one day, It's really, you can join an organization of your choice that is working towards or for a cause that's important to you. And you can really go in and pick up any sort of task that they may have, or, you know, develop a role for yourself within a DAO. And I think this is a very unique time for entrepreneurs or who are trying to get into this space, or who have been in this space for the past few months and years, to really utilize this new type of structures to get exposure before they commit full time.
So one of the things I said was we're going to try and demystify a bit, right? We've been using some acronyms and we've been using some terminology. Uzair, take a step back, go up a little bit higher level, and describe for participants that may not be familiar with the governance or the organizational structure of a DAO, because it's, I mean, if there's business school students here and they're kind of studying the theory of the firm and why firms exist in terms of some more optimal way to organize a collection of efforts to produce stuff, the DAO shakes that up. Okay.
Yeah.
Yeah. So can you just, because it's a very powerful concept, right? And just give a little more color around this.
Yeah. I'll take a step back. I think you know, most of us who have a business background, we're familiar with, you know, the typical types of business models we hear about: sole proprietorships, partnerships, or, you know, a public company. A DAO is really, I like to call it, you know, us millennials, our take on the corporate structure, if you will. And I think, you know, it really takes that idea of one man or one group of people making decisions for an organization and turns it upside down. So it essentially tries to, you know, we were talking about consensus earlier, and, you know, and I think this whole space is consensus driven. But what a DAO does is it takes that idea of consensus, and, you know, we don't just take that consensus to agree on transactions. We actually take that a step further when you're looking at DAOs, and it tries to get a collective agreement within a group of people to make governance related decisions. So to sort of put it in, or give you an example, if, let's say, you know, we were working at a financial institution, we wanted to change the sector that we're focused on, right? We would have to go talk to the management. Management would then have to go talk to a board of directors, and ultimately someone would make a decision, yes or no. Nobody really knows who said what and what really happened behind the scenes. With a DAO, it would work in a very simple way. So you'd have, let's say, a forum where a topic would get posted, people will debate, and then you would put it up to a vote to the members of the community. And the community then essentially just casts a vote, and whatever the outcome is, that is what is executed by the people behind or the operations team for that specific DAO. So that, in a nutshell, kind of explains how decision-making is sort of crowdsourced rather than, you know, kept behind a black box controlled by an individual or a group of individuals.
Okay, thank you. Okay, so DAO, very important, powerful concept: entrepreneurial opportunity, new governance structures, new organizational structures. Okay, I'm going to go over to Jamie. Jamie, what's your advice over a cup of coffee?
I think for entrepreneurs that this space, you know, there's so much opportunity for them. You know, you've got the DAO space, as Uzair was talking about. You've got NFTs. You know, you've got, you know, can you make property rights on NFTs? You know, do we finally see, you know, this as being the end of horrible, complicated property transactions with, you know, chains of estate agents that last forever, because you know, we can automate the whole lot. There's huge spaces for entrepreneurs to get into. It's really just a case of, you know, being able to either build up your own knowledge and start, you know, the engineer approach, you go and build it, you know, or the business side approach where you go and get yourself a business plan together and raise the funds to build the team to do it. But it's many areas you require huge degrees of permission and upfront agreement to get into. This isn't one of those spaces. You've got essentially the ability to get started now, and that, I think, for in the finance world is very exciting, because prior to crypto, anything involving money required a huge amount of upfront vetting. And that, I guess, has its positives and its negatives, as we've no doubt seen. But the pace of innovation in this space is now outstripping anything that we've seen. I mean, we've had more innovation in crypto in the last 10 years than I think we've had in banking in the last, I don't know, 20, 30, 50, who knows?
Yeah, and part of that has been sitting outside of the regulatory perimeter. But the caution to that, of course, is that peer-to-peer lending and marketplace lending was sitting outside of the regulatory perimeter in China. Kaboom. But I'm not trying to, so I'm just saying that, and there was phenomenal innovation in China in that space. So it definitely plays a role, as long as, but I think Tina's point was, at some point, you do want to bring it, you actually want the regulation at some level, right? And we can debate that to some degree. Lynne, I'd like you to go over to you and your thoughts of where, if you're coming in, where are some pockets to focus on?
Well, the thing I love about, just to step back on the DAO side, is everyone benefits by providing context to the ecosystem. And so I think that for me is a big shift, because that's what, didn't happen to me in a financial institution. But, the opportunities are endless. I mean, some of the things I'm seeing that are really exciting is this real estate tokenization. The other thing I think is really interesting is this sort of retail one-click buy. So I don't even have to go to a store. I see you have that shirt on. I like the click. I buy that shirt. Some of the healthcare, the identity, the genome.
Lynne, stop for a minute. Walk us through the one click.
So
how's the one-click work
situation? And I'll use the worst example ever, but in the United States, the Kardashians are better than news. And so if the Kardashian have something on and you think, I like that, you don't have to go searching, gee, where do I find that shirt or whatever. You click on that item and it says, Saks, $500. Would you like one? What size? And you click on that and you say, I need size 8. Use my Macy's credit card, whatever it might be. But it is a one-click buy, which has taken the entire shopping world, the retail world, completely by storm.
And is that a DeFi related app? Is that what's happening? Essentially,
Yep.
this is algorithmic execution.
Yep. It
Okay.
automatically figures out where that is, what store has that and what the price is, et cetera, and puts it on that app. So yes, it's all in a DeFi world. I mean, it's, so those are some of the things that I see in this new world that we're engaging in. There is great value beyond the ecosystem itself. And who knew that you could do some of these things? The tokenization, the property is amazing. Legislature. I mean, we know that there's certainly in the United States, there's a debate every few minutes, right? So any kind of legislature, any kind of governing body trying to make the rules and the regulations, so this is a safer environment to interact with.
So your point is then what's happening is there's a big spillover effect in adjacencies around this space that are being impacted, right? Sort of a cascading of the
Coinbase, which is an exchange,
good example.
has an agreement with Shopify.
Yeah.
So essentially that's what they're doing. You want to buy this with crypto, you want to buy this with, Dogecoin or whatever. Some of that's not completed yet, but that's sort of what I look at as sort of a retail one-click buy, that Coinbase and Shopify have sort of gotten married to allow a process like this to happen.
Okay, great. Thank you. Sean, your thoughts?
So we did a big report with the UK Parliament, all-party parliamentary group on blockchain in 2018, and we just did a refresh of that. Bob, you're actually included in it 2 weeks ago. And what we tried to do is look at the whole economy and see the various sectors that blockchain and digital technologies can be enrolled in. What's been fascinating is in this report, the recent one, we've seen just how much fintech and crypto as the financial services use case for blockchain seems to be predominant. And I think there are really interesting things around that. And as an entrepreneur, you're always trying to solve a problem that you identify. I mean, that's where you add value. And I think there are, and we've discussed them on this call, but quite a few areas that are problems in existing banking services or existing delivery of movement of money or store of money. But the two that really scream out for me are identity and governance. And I think Uzair spoke about some innovation around governance with the DAO. But I think there are still those fundamental questions around trust and fiduciary responsibility. And identity is such a big one, particularly as you look at the regulatory and legislative frameworks around as we deploy these new technologies. There's a lot of fun, and you can operate in certain iterations outside the regulatory perimeter to test things. But eventually, I think this whole space will be held to a very high standard and should be held to a very high standard. And around these topics, if there is a way to roll them out at scale, where people can have a clear understanding of who the counterparty is, see everything that they've done in the past, but in a way that respects their privacy, I think those types of innovations are necessary for it to take off. We're obviously watching the space very closely, but the UK is got a great tradition of the rule of law and innovation in financial services and technology. So hopefully this could be one of those places where things do take off.
Okay, thanks. Those are really good comments, particularly around identity. There's an organization indirectly backed by the Japan FSA, the regulator, believe it or not, very focused on identity issues in a decentralized market infrastructure called BGIN. That's doing a lot of work in this space, and I know there's some other areas, but I would agree with your sentiment. Teana, your thoughts, please.
Well, Sean stole my number one opportunity. I think that identity, for sure, is a big problem that needs to be solved. I think one thing that I would like to see is that, just to go one step further, that kind of tokenization of identity, so that, you know, yeah. I have my identity tokenized. I can then take it to my high street bank. I can then take that token to a crypto platform. I could take that token to a mortgage lender, and I don't have to do all of that stuff, right? So within that smart contract, it's already confirmed that this is me, and then I'm able to permission who sees what information. I think there's a lot of opportunities for that, not just in financial services, but healthcare, for example. And there's a lot of challenges in other countries around you not actually being able to own your own healthcare information, right? So that somehow your healthcare information is owned by the insurance company or the government, and they're the ones permissioning that out. That to me just seems completely crackers, right? So if I were able to have a tokenized me and provide permissioning to whoever needed certain elements of information about me, but not every element of information about me. So for instance, the passport vaccination records that we're now having to provide to people are a classic example of,
I agree with that.
If, I need to prove that I have been vaccinated, but I don't necessarily want you to know that, I have some embarrassing condition, right? So I don't want to give you access to all of my healthcare data. So that's one. I think another key area, similarly related, and also kind of knocking on the door of that governance piece, is around KYC, so know your customer practices. So when you show up to a bank or you onboard with PayPal or with a crypto platform, there's a number of steps that you have to go through, and that creates quite a lot of friction for the consumer. And I don't think that we shouldn't do those things. I think that we need to. But from a regulatory perspective, if we were able to demonstrate to the regulator that the same level of transaction monitoring that we're able to undertake on a blockchain could be done on transactions and the and the counterparties, the people, a little bit like what Sean was talking about, I think it would really reduce the perceived risk around money laundering. So there's a great stat. Chainalysis puts out a report every year. There is this perception that crypto is used by criminals. The latest report indicates that 0.34% of crypto transactions last year were used for illicit finance. So that is a very, very different picture than what the mainstream press would have you believe. But being able to prove that and demonstrate it over and over and over again in an always on kind of dashboard capacity, I think would be absolutely life-changing for this industry.
Yeah, I mean, that's a really good comment. And of course, the KYC issue relates back to the identity that Sean was talking about, because it's kind of like foundational in that. I want to go to a couple of the questions that have come in because some are really quite good. I like this one about the most urgent problems this is from Akshay. What are the most urgent problems to solve in crypto education? Because the education level, you've talked, I mean, so many comments today have talked about, well, the press misinterprets this, or about the energy, or about where should the focus around crypto education be? Where are the big blocks? What do people fundamentally need to understand to get comfortable with this? Or maybe there isn't a block. Lynne, what are your thoughts?
Well, I think that they really need to understand some of the legalities of it, you know, the finality of payment. So some of the legal things that are unique to crypto that are different than, say, traditional finance. So if you're in a financial world, and also understanding part of the things about, you know, my identity and my health records. I mean, I agree that all that is very key. Like, how do I give permission, or what, you know, who gets permission, and how do I manage that process? I think those are some of the understanding the fundamentals, but also some of that is really key right now, that people don't know where the boundaries are. Where is the, you know, what are the differences between what I do today and this new world?
I'll go over to Sean. Can you comment a little bit on where you see the education challenge?
On one level, I think it's a problem for the industry to prepare better user base. A lot of people approach, and we've seen huge innovation. I think Coinbase is excellent in what they deliver in terms of just, it's very transparent, you know what you get. And now they've rolled out also protections for almost like the financial services compensation scheme, where a certain amount that people hold with them is protected. That is amazing for the sector. We've struggled with things like insurance and trying to prepare ways for people to enter into it, knowing that with eyes open, they can have certain protections in place. And Coinbase is not alone. That's been a trend across the board as firms have grown up and have got to see what actually the users want, and in a way that can be delivered to them without them needing to know private keys, needing to be concerned about losing something that they don't really understand where it's kept. If it's virtual, where are these assets? And I think education is going to just come over time, and it has come. The report we did was hugely helpful for me, and also the Cambridge materials on an academic level. But I think user experience and that day-to-day, almost just trying it, putting a few pounds in, or however much you think you might want to just play around, and actually doing it means you get your head around what some of these things are unfolding to become. And in a way, it's very similar to what's come in the past. It's just delivered in a different way in the back end, if that makes sense.
It makes a lot of sense, actually. And I mean, Jamie, would you agree that just, you know, set up a wallet, start to play with it, where it almost becomes experiential of getting your head around this? Would you agree that's a pretty simple, straightforward, and actionable step at low cost that I think a lot of people could take?
Yeah, I mean, absolutely. We built Solidi to be that sort of easy to start experience. So actually, you don't even need a wallet. You can just come to us, provide us your name and address. You don't even need ID documents, and you can buy your first crypto, £10, £2, whatever you want. But yeah, we would encourage you to then go to the next level. Get a wallet on your phone, transfer some crypto to your phone, send it to your friend to see just how quick and simple this really is. There is one thing I commented on earlier, you know, the difference between 2011 and now is transaction fees are quite high in the crypto space. So maybe start on something like Litecoin where the transaction fees are still relatively low. But, you know, take those steps and go out and do it and see just how different it is to, you know, your existing sort of financial setup, you know, where the onboarding experience is different, you know.
Yeah, I agree. Look, we're trying to, we did this spin out. We landed X million pounds in the bank from a financing, and one of the major high street banks in the UK said, no, don't want to open an account. Part owned by the University of Cambridge. You know, it's just unbelievable. So I think, you know, everybody kind of shakes their head at these sorts of experiences. But Jamie, so your advice is just get your hands dirty. Just start playing with it.
Absolutely. Just, you know, you can't, you know, it's the same with everything. You only really learn when you actually do. Reading about it and all these other things, you know, that's great, but it's only half the thing.
Okay. I've recognized we're running out of time. This always happens that the questions start flowing in right near the end. So we're going to kind of play rapid fire. But I think there's a good one here about how much influence do you think from Rosen Patel, who's in an MBA this year, the new, what Rosen calls the new generation will have, that's something it sounds like an old person like me would say, will have, but how and when driving change towards a positive outlook on crypto in general, especially among traditional investors. In other words, this demographic shift, right? Like I have a 29-year-old son who just thinks, you know, crypto is just, you know, totally normal in his world, right? And so how are you, I'll go to say Uzair on this. Is this generational shift going to, is it just a different view? We talked about kind of being kind of digitally native, going to have an impact on adoption and acceptance here?
Yeah, I think that's already happening, not just on adoption and acceptance, but also the direction the crypto and broader blockchain industry is heading in. It's, you know, as they call it, the meme economy is here. It's real, and it's not, you know, it's not being driven by you, Bob. It's it's probably you know, people like your son and you know, my generation, millennials, we were still kind of new to being sort of digitally native, but Gen Zs and you know, Gen Alpha or whatever the new one is, as they call it, that's all they know. And so I think, you know, we're going to get to a point in the next few decades where that will be all that people know. They won't know, you know, what a checking account is, or what a savings account is, or what the difference between those two are. And yeah, so I would agree. I think there's definitely a big element.
I'm going to go to Lynne for one that's come in from Keith Bear, and I know Keith knows a little bit about this space, but he's asked a question that's, I think, really an interesting one, because Lynne, you mentioned, or others have mentioned as well, tokenization, real estate tokenization. You know, it hasn't really broken through, right? So to date, it's been pretty small stuff. What's the barrier to scale here in this really being deployed?
Well, you know, there was a big deal that was done in New York today, I believe, or it's on the verge of being done. I am actually getting a lot of calls from real estate companies about that. I think there is a hesitation when you look at some people who own a lot of crypto, if they want to use that, you know, as collateral or whatever. I think there's a little bit of hesitation, you know, price volatility, but it is happening. I mean, it may not feel like it's happening, but I think behind the scenes, it is absolutely happening. And it will open up an opportunity for a lot of people to invest in real estate, to buy properties that they maybe couldn't afford. So what is the real catalyst? I think it's the education. I think it's we're on the cusp of this happening. I think coming out of COVID, I was in New York last week. You know, it is happening. We're not quite there yet. The buzz is just talking about this. I was with some real estate folks talking about the subject. I think we need a few more months, but I don't think it is not years away. And it is being driven by people like the Winklevoss twins, right? I don't know, the early 40s, something like that. It is happening. And it is slower than we might have expected. And I think COVID is to blame for that. I could be wrong.
Okay, well, thank you. Now I've got my the hook, you see, the message that says we have to wrap. While the good questions are coming in, we didn't even get into the debate about fiat money regulatory approval for large regulators. It's now pouring in, but we have to stop, unfortunately. I want to thank the panel very much. I think great discussion and varied backgrounds and perspectives on this that I think made it very, very rich. Thank you. Thanks to all of you.